Hello, everyone, and welcome to your on-chain update for the 15th of February. So today we're going to dive a little bit deeper into the emergence of these inscriptions. And in particular, I want to look at two kind of major questions. One is, what is the implication in terms of data and transaction usage and block space consumption and kind of the more technical data-based angle? And the other one I want to look at is, what is the impact that these inscriptions are having on the Bitcoin fee market? Because this is quite an interesting and dynamic reality. And what I really wanted to assess, kind of the concept of going into this, particularly on the fee rate section, are these inscriptions actually consuming block space and pricing out monetary transactions? So there's it's a challenging thing to answer, particularly this early in the trend, but we do have some data that we can explore here, just to try and understand, are they in fact pricing out monetary based transactions, or are they essentially two completely different animals competing over the same block space, and thus the fee market in a free market will essentially do the job for us. Anyway, we'll get into that and we'll start touching on those points. Okay, so where I want to start with this thing is looking at the inscriptions by type, right? What are the types of inscriptions that we're actually seeing playing out? Now you can see here that the orange one is image. We've got text here in blue, other in red, and then there's a couple of others, audios and videos and stuff, but they are very small by comparison. Now, the other important thing to note here is that the left-hand axis is in log space. So up the top here, we've got 100,000 in terms of total inscription count. This is 1,000, this is 100, this is 100 here, this is 10, this is 1. So even though this red zone here, which is other, looks large in relative scale, this is actually only getting us up to the 200 mark. So, you can see here that we've got about 200 and something other inscriptions. From 10,000 to, let's just round numbers here, say from 10,000 up to about 100,000, because we are pushing towards that 100,000 inscriptions, the vast majority, or 90,000 of those things, are essentially image metrics or image inscriptions, which is kind of interesting. So people like the apes, right? People are happy to inscribe images. We're also seeing some of these teleburn things, which is very, very early. I did actually listen to Citadel Dispatch. They had a podcast with Casey Rodama, who's basically the guy who came up with this whole thing. Well worth a listen. At the very least, just to understand a bit more about SegWit, Taproot, the technicals. I certainly learned a lot by listening to it. There's a lot of fluff in there. I think it was about 1 hour in that they really start getting into the meat of it. So you can probably skip the first half if you really want to get straight to the technical side. Anyway, so what we can see is that images are the dominant inscription type. Text type is the next most dominant, and this is quite interesting because text obviously has a much, much smaller data footprint, and we'll look at this in the fee distribution shortly, but image inscriptions are much smaller, and therefore they're going to pay, because you pay per byte for Bitcoin. So therefore, if you're putting in, a smaller text file, there's less bytes, your absolute fee, you may pay the same fee rate, but your absolute fee is much, much smaller. Same for a monetary transaction. If you're only moving UTXOs around with no inscription, you're essentially a very, very dense transaction per byte. The amount of value that you can get out of that transaction is much higher than if you're inscribing a JPEG or a video or something like that. So anyway, kind of interesting that images remain the dominant. Kind of makes sense given the NFT craze that we've seen over recent years. If we look at the actual dominance of inscriptions overall, what we saw is that over 6% of all on-chain transactions were, this is at the peak, we're currently here at about 4%, are inscriptions. So this is kind of interesting because the vast majority in terms of a count of the transactions that are going on, and these, remember, are the ones that are being mined into blocks, the vast majority of transactions remain the monetary ones. So we're seeing between 6 and 4 point something percent of all transactions being inscriptions of some form. And you can see here that the vast majority of that is actually still those images, and then here's our text ones down the bottom. So kind of interesting that even though we've seen this kind of inscription craze, let's call it, and we're coming up to about 100,000 inscriptions, we're talking about 6 to 4% of all transactions. I mean, you could almost argue that at a flat level down here, about 3 point something. So the vast majority of transactions continue to be that monetary type, which is just one thing to pay attention to. Now, in terms of the total size, we've passed 1 gigabyte in total inscription size. And this is really since middle of December when these things really started to roll out. This is a 0.4% increase to the chain size since then. And we will look at a metric in a second where we've basically projected out how much of that space If we roll this clock forward and run another Bitcoin experiment for 14 years, how much does the block size increase or the total blockchain size increase? We'll look at that in a second. But again, on a log scale, the vast majority of the data footprint, basically from 100 megabytes up to over 1 gigabyte. So let's just say probably something on the order of 1 point something gigabytes out of this is actually image files. So they are taking up the vast majority of total space. 100 megabytes is basically everything else in terms of inscriptions. So this is a bit of a view on the history of how we got here. For those, again, I do recommend checking out that Citadel Dispatch episode to understand more about this. It certainly helped a lot of things click for me. But essentially, back here in 2017, this is where we had the SegWit upgrade. So what is shown here, ignore the blue curve for a second. This orange curve here is the average block size. Now, prior to SegWit, which is up at this level here, and you can see that we started butting our head up against the ceiling of this, this is the 1 megabyte block limit. This was what was hard coded in by Satoshi. In fact, I think it was unlimited at the beginning of Bitcoin, and Satoshi snuck in a 1 megabyte limit. Prior to SegWit, that was the maximum block size, and we butt our head up against it over here. Now, following SegWit, which was basically just before in mid-August 2017, you can see that we started to break up and above that 1 megabyte limit. Now, in theory, the block is allowed to have 4 megabytes in total, but it's not quite that simple because the data structure for Bitcoin is split into two components. There's the transaction component, sender, receiver, input, output, volume spent, things like that. And then there's the witness portion of the data, which is the signatures, the cryptographic proofs, the validation system. Now, within those things, there's 4 million weight units, right? That's what the block size, it went from being 1 megabyte, which is a data footprint, to what we call 4 million weight units. Now, when you're looking at the transaction data, each byte in that transaction data counts as 1 weight unit. Essentially, it's 1-to-1, bytes to weight unit, 1-to-1 for the transaction data. For the witness data, however, each byte of witness data carries only 25% of a byte. So there's a 4x discount. So therefore, if you had a single transaction, which is what we saw actually recently, there was one block that hit that 4 megabyte standing. And that was essentially filled with one inscription, because that one inscription, there's the transaction data, which is relatively small, but the witness section, which has a 4x or a 25% weighting, each byte counts for 0.25 weight units. If you therefore fill that with data, which was this particular image, you can essentially fill that 4 megabyte block. So the witness allows us to push up to 4 megabytes. Now, why does this matter? Well, if you're sending transactions, you can see here that we keep hitting this soft ceiling up here, which is about 1.3, 1.4. Sometimes we get blocks of like 2.3, 2.6 megabytes. On average, it's about 1.3 megabytes. And this is those SegWit adoption is at like 85%. The reason for this is that most of the data being captured in these blocks is transaction data, because it's been mostly monetary. But what you can also see, let me actually just zoom in on the last year. Now, by the way, this is a little bit technical, but try and follow along here. What we're seeing is that this explosion higher in the mean block size, it's now up to 2.5 megabytes. So the orange curve and the purple curve that we see back here is somewhere around 1.1, 1.3 megabytes as an average block size. We have pushed up to 2.5 megabytes following inscriptions coming on the scene. So really, the big take-home message here, following SegWit, blocks were allowed to get up to 4 megabytes. The blue curve here, which is basically showing how far above that 1 megabyte cap we are, you can see is starting to increase. Now, if we only had full blocks with monetary transactions, the average block size would be somewhere around 2.3 megabytes. That would be the max, because essentially you've got a balance of witness and transaction data. With inscriptions, the block size can actually increase beyond that 2.3, 2.5 typical cap, because more of the witness data is being taken up by these inscription files. So it's kind of an interesting dynamic, but just the real way to think about this is the more witness there is, the larger the block size can be. So if we assume there's going to be a lot more of these inscriptions going on, the block size will increase. The theoretical maximum is 4 megabytes, but the more monetary transactions are packed in rather than inscriptions, the more that block size will come down. So then you kind of take that concept and say, well, let's project out some of these cases and see how big will the Bitcoin blockchain be in terms of gigabytes if we run another 14 years. So just projecting Bitcoin another 14 years into the future. And these are the curves that we have. So I've got three here. The first one is the 1.3 megabyte size, which is essentially saying, let's imagine that inscriptions never happened. What is the peak monetary full block transaction size? About 1.3 megabytes on average per day. We then have a second case, which is in our orange here, which is saying, let's take the 2.5 megabytes, which is the largest average daily block size we've seen since inscriptions went live. Basically what this spike here is showing us. Which, by the way, you can see the scale of this thing, right? It's non-trivial. It is a significant jump higher in terms of block size. And then we also have the red curve, which is the impossible to ever hit. But let's imagine every block from here on is 4 megabytes, fully filled with witnesses, and it's just inscriptions only, right? Every single block is just a single 4 megabyte inscription. So if we look at this thing and we actually model out what's the blockchain size, in our biggest case, 3.4 terabytes. By the way, at the moment, we're 455 gigabytes, right? So this here is about a 6 or a 7x increase for full 4 megabytes. For the 2.5 megabyte case, we're talking about 2.3 terabytes. And with the, if we had no inscriptions whatsoever, 1.4 terabytes. Now, if you also run that calculation through the average cost of a SSD or a hard drive these days, basically in the year 2037, with no efficiency whatsoever to data and data storage and all that technology and that natural deflation, if we assume that hard drives never improve ever again, you're talking about a hard drive that costs you $120 to hold the 4 megabyte case, the maximum theoretical upper ceiling. $120, well and truly still within commodity hardware territory, and we all know the technology deflates. So actually, in terms of blockchain storage size, we essentially signed up for this particular 4 megabyte case back when SegWit happened. This was the deal. This is the way it comes and goes. So really, all that inscriptions have done, in my personal opinion, have accelerated the rate at which we hit that 4 megabyte ceiling, or that higher full block in terms of data ceiling. All of this was already calculated and understood well and truly in advance. And as far as I'm concerned, there's basically no issue here in terms of data footprint. There's other questions around full node sync times and stuff like that. But from pretty much all the analysis I've seen from some credible folks, as well as my own understanding, I really do think that the maxis are just looking for anything to grasp onto to say, get this stuff out of my blockchain. Well, sorry, fellas, it ain't your blockchain. It's for all of us. So if you want to change it, go and fork off and we'll see how that goes. Now, moving into mempool congestion and fees, because this is kind of an interesting angle. What we've got here is three different models. In the red, 1 megabyte. In the green, the average block size, and in blue, full 4 megabyte block sizes. What we're looking at here is how many blocks is it going to take to completely clear the Bitcoin mempool. Now, the takeaway I want to have here, this is the post FTX implosion. Now, what you will notice is this thing ripped higher and then decayed very quickly. What we have here is a sustained uptrend for a period of almost, I think it's about 3 or 4 weeks now. So we're not quite at a month, but this is a sustained uptrend. This is a flash event, and then basically the miners just chew through it. The blockchain goes back to being quiet. This is now a multi-week sustained uptrend of usage of the blockchain, which is good to see, right? This is kind of on-chain activity 101. So we're seeing that there is congestion starting to build in the mempool. And as I've said many times, I think on-chain activity, even if it's coming in the form of inscriptions, is good. This is constructive. This is positive stuff. If we look at the total size of these transactions and break it up in terms of the fee rate that they're paying, note here that the FTX implosion, this large orange spike, these are heavy fees. These are people paying 10 to 50 sats per byte. Mostly, in fact, I would say almost entirely monetary transactions. People panicking, people saying, get me the hell out of here. Note that the lower urgency fees started to show up after the event. In the initial spike, it was primarily the orange, which is essentially showing like, get me the hell in this block. I'm panicking. I need to sell. I need to withdraw. I need to recollateralize, margin call, whatever it is. Huge explosion of high value, high intensity transaction types. Now compare that to our current inscription-based mempool congestion. Lots of purple, lots of dark blue. These are 1 to 2 sat per byte. These are very, very low fees. What we're seeing is that basically inscriptions are willing to wait. They're buying the cheapest block space. They're almost forming this like base level of demand at the lowest fee rate. So you can see at the top here, there's actually not much color going on. Any transaction that's monetary that pays like 3 or 4 or 10 sats per vertical byte is basically just going to get consumed straight away. The miners are like, yep, cool. Give me these small transactions paying just a little bit above the floor, and I'll gladly include those. So basically, these inscriptions are a buyer for the cheapest block space that exists, which is an interesting thing, and we'll talk about this in a sec. If we look at this in terms of the total amount of BTC that is flowing around in the system, here is the post FTX space. Note that we're talking about, 50, 30,000 BTC sitting in the mempool, lots of coin volume on the move. Where we are at the moment, we're barely getting above 10,000 BTC in the mempool at any one point in time. You can see that really, in terms of coin volume on the move, we haven't really changed regime. It's very much showing that the current hype and activity is primarily being driven by these inscriptions, which is quite interesting, right? This is a break. This is a change in structure and character. We have a second buyer of block space that is quite different to what we've seen in previous eras. So very interesting, quite dynamic and good to see. In terms of the fees, right? We're talking about this fee pressure. If there's a lot of demand for block space, but it's only paying a low fee, yes, you're filling those blocks, but you're also not paying a huge amount of fee. Look at the post. This is again, post FTX. The amount of fee in terms of BTC. So up here, we're talking about over 18 Bitcoin in fees, right? Remember, the block reward is 6.25 per block. This is on a 10-minute time frame, by the way. So we're seeing 18 BTC in fees during that FTX, but note how quickly it decayed. Here we are at the moment, we're barely getting up above about 2 BTC in terms of fees. It is building, but you can also see there's a lot more color going on in here, and there's a base level here of these 1 to 2 fee transaction types. So again, it's kind of showing that the overall revenue, it's kind of a base level. It's lifting the floor from 1 to like 4 sats per byte and then kind of stabilizing. So in many ways, monetary transactions are still relatively cheap compared to what's going on with inscriptions. And the way I'm kind of really thinking about this, and maybe the next chart will help us kind of dissect this even further, what we're basically seeing is that inscriptions are a low level, quite price fee rate sensitive type of transaction. People aren't willing to pay high urgency fees to get their inscription mined. They're willing to wait. There's not really the same urgency as a post FTX type environment. So what this one here is showing is those fee rates, right? 0, 20, 40, 60 Satoshis per byte. And in terms of those types, in orange, we've got images, and then in blue, we've got text. So the takeaway here, you can clearly see that image metrics, which by the way are much heavier in terms of data, the same monkey JPEG will be much larger than a text file. So the image inscriptions have a massive weighting to this left curve. They are willing to pay less of a fee rate to get per byte to store. And that is because people are sensitive to the absolute BTC value. A big difference with inscriptions and NFTs. NFTs, the NFT creator can do one single transaction and mint the entire NFT supply, which then people go in and actually buy, and they do the minting process, but technically the NFTs are already minted. It's basically a withdrawal transaction when people are minting NFTs. For Bitcoin, each inscription, even if you're doing a 1 of 10,000 collection, each inscription has to be paid and done individually. You cannot mint a batch mode of inscriptions. They have to be done on an individual transactional basis. So what we're seeing is that people are sensitive. They don't want to pay 40, 50, 80, 100 sats per byte in order to get their image mined. They would rather pay between 1 and 20 at most. So that's because you've got a larger data footprint times a smaller fee rate gives you the same absolute fee as a large text file, but paying a higher rate. So the other way to think about this, for a monkey JPEG, you can fit stacks of text, right? Because text is very, very light in terms of data. People are willing to pay 100 sats per byte times a very small piece of data because the absolute fee is like, 10,000 Satoshis. Whereas if you do a very, very large image file and you multiply it by 100 sats per byte, you're suddenly paying a million sats or 5 million sats or something. So basically, inscribers are fee sensitive, and they're sensitive to the absolute amount of BTC. So remember, the absolute fee that you pay is the data, the data, which in Ethereum terminology is the what's it called? The gas limit, the transaction complexity, the data size, times the priority fee, sats per byte, right? So to get the total fee, you multiply how much data or computation are you doing, multiply by your fee rate. If you're doing a large computation, people are willing to pay less on the fee. If you're doing a small computation with small data like text, people are willing to pay a higher fee because the absolute value of the fee is kind of their anchoring point. I don't want to pay more than this in terms of fees. So anyway, kind of an interesting dynamic that we're starting to see play out. So anyway, hopefully that's kind of a useful snapshot into what's kind of going on with this overall system. Kind of interesting, kind of unique. My big takeaways from this is in terms of the technical data footprints and, initial node sync times and pruning and all that kind of stuff. Really, I don't think inscriptions are a problem. I think at the core, what they've done is accelerate us towards a state of full blocks. We were going to get here originally anyway. It was just a matter of when. And here we are, and we essentially have full blocks. Now, the concept that inscriptions are pricing out or crowding out monetary transactions, I actually see in this data quite the opposite. We're seeing that inscriptions are quite fee sensitive. We will see what happens in the bull market. Maybe this gets a bit more chaotic, but overall, my view is that inscriptions are going to be the buyer of the cheapest block space. So this is basically a lifting up of the lowest fee floor. However, monetary transactions, which are very, very small, and therefore pay a small absolute BTC fee, will essentially be able to sit on top and just gladly get consumed by the miners. So essentially, it's very possible that the days of 1, 2, maybe even 4 sat per byte transactions could be behind us. This is something to note whenever you're doing a Bitcoin transaction. You're opening a Lightning channel, you're withdrawing from an exchange. If you have settings like these things, exchanges are normally pretty good with withdrawals. It'll be more so stuff that you're sending. Just be aware that 1 to 4 sat per byte transactions may not get confirmed for a very long time. So just keep that in mind. There are wallets that allow you to do replace by fee, probably worth now putting that on, which means you can essentially respend that coin with a higher fee, and miners will say, yes, I'll take that one there, and drop your previous one. So that's kind of the main consideration here, is that we may not go down to a low fee rate for some time, maybe at all. We'll see. But overall, I don't believe that inscriptions are consuming transaction fees. They're essentially just giving that extra uptick in miner revenue. And to give it a bit of a sense of scale, here is miner revenue sourced from fees as a percent. This is inscriptions, right? So we're kind of at this point where it's providing a base level of fee, but it's still 2 to 3%, right? It's kind of the same as what we had post FTX and nothing like the bull market. So this bull market, this is all monetary. Monetary wise, people are willing to pay a higher fee in a bull. We're not even close to there yet. So overall, I think a lot of the concerns are quite overblown. I think the maxis are wrong. Who's surprised at that the outcome? But overall, I think this is great. This is fantastic to see. I'm kind of enjoying poking around the data and seeing what's going on. I did a couple of inscriptions myself, which is a bit of a technical hoo-ha, but it's kind of fun to experiment with these things. If you are going to experiment with inscriptions, I recommend doing 2 things. One, do not use the same wallet that you hold your holdings in. Make a new wallet to play around with it. 2, go into this thing assuming that you're going to break it, lose it, whatever it is. There's people who are doing early phase telly burns and sending their bored apes from Ethereum to Bitcoin. I would strongly advise not doing anything like that with something that you care about. The technology is still evolving. Be very careful. It's fun to experiment. But certainly I would not be taking too many undue risks. This is very, very early technology, but it's also good to play around with it. One source that I have been using, so a resource that I have been using has been gamma.io. This is one of these NFT marketplaces that specializes in stacks. Nevertheless, what they've done is very quickly rolled out an ordinal inscription builder. So this was fairly easy to use. You upload an image, set your fee rate, blah, blah, blah. I've got one inscription that's been sitting in the mempool for like 2 days now. And I've had two that I paid with a higher fee rate that got confirmed within about 6 hours. So, it's kind of fun to play around with. For $10 for an inscription, it's kind of just something to test and see how it works. But as I said, do not use your wallet that you hold your Bitcoin holdings in. Use a separate Taproot wallet that just allows you to test and play with the software. Do not put any of your serious holdings at risk. But again, have fun and see how these things work. Again, all of these things, like the cold card, the more you play around with it, the more you learn about Bitcoin and the technology that underlies it. Anyway, hopefully that was a useful session. Happy to hear your comments and thoughts, and I'll see you in the next one. Cheers.